Alright, we're just going to review some trends and all of that, turning points and trade opportunities, etc. The first thing is to draw the lines so you can frame the trend. Folks, framing the trend and its break is, in my opinion, is a starting point. And then you do the levels. Alright? Well, from here, it was uptrend, which was forecasted how? By these two. By these two right here. That was telling you price is going up. Alright, and basically pulled back hard and then went up. Now there's a big problem. Can you see the problem? This is a problem. Right there. You see that 49 and the 24, I don't know, 14 or 24, can't really see clearly. I think it's the 14. That is very heavy selling. That's very, very heavy selling. And it cracked this red line. That's really bad. Really bad. So the chances of it going up, I don't know. I mean, unless there's a catalyst, that selling right there is, I think it's going to break down. I think this is a change of behavior. Went up, up, tested, up, climax, boom, broke. This wave had a lot of volume. And did it hold? No. It went down on a lot of volume too. That is an indication of distribution, because a volume wave is not holding. So that's a problem. Anyway, long story short, I think this is a change of behavior. The probability favor a change of behavior. Second is this heavy selling that broke, and now got tested once, got tested twice. So remember, you draw your left-hand side is where the trend starts, right? So you click. Let me delete it to show you how I do it. Go here, bang, left-hand side. That's the start of the trend. Then you do the trend line. So first I scope the trend by drawing a vertical line. The vertical line is the demarcation, or the how should I say, is where the trend starts. This uptrend on this started there. So first the left-hand side, all right, this vertical line. Second is the trend line. Bang. All right, now I'm not a fan of trend lines. Let me just tell you, I don't like all the mess, but I found them very valuable. And I guess that's why Wyckoff had it as a test, you know. Anyway, so third thing is levels. So what are the key levels? So 1, 2, 3. Third thing is levels. Right there and right there. I made them very light so they don't annoy me. You know, I can't read all those lines. So it's very annoying. Very, very annoying. Alright. Anyway, and you can see how they're respected. Like it went back, it went tested, and went to resistance. Went down to support, and then went up to resistance. So both support and resistance both have been tested. That is a sign that there's going to be a break, because support and resistance, the range was tested between support and resistance. It tested the low bar, tested the high bar. So that's so look for now. It has to break or spring or up thrust. Up here, if it goes up here, up thrust. Down here, spring. Or in my opinion, it's just going to break. I mean, I'm waiting for the break. And you can see that the selling here is very strong. It has a change of behavior. Biggest selling wave in 49 waves. Has a breakdown break with the biggest volume in 100 bricks. What is all this telling you? It's telling you that they sold. The key thing here also is this wave up here. You see this wave is the biggest up wave in 49 waves. Did it slow hold? This is the biggest upwave in 49 waves, and its low was broken. That's the biggest volume in 49 waves, and it couldn't hold, and its low was broken. So what does that mean? That means that that has a high probability that that was distribution in that upwave, because it's unable to hold, right? Smart money, if they put money with volume, they would hold, unless they're selling. They're selling the rally, meaning it has climactic behavior. Right here. And selling. Now, and look, it doesn't have to work, but that's what the probabilities favor, and that's what I need. All right, and then I can check the rest. All right, and then when it goes there, look at the selling. So doesn't this make the case for a climax up here followed by change of behavior? Or what Wyckoff called the climax and the automatic rally? Obviously. And then over here was tested and all that shit. All right, so let's take a look. 1 second. So we're gonna take a look at first I have to draw where the hell I'll have to draw this. So against this area there's a breakout right there. That's the dominant breakout right there against this minor low. Yeah, that's a minor. Alright, that's the breakout, and rally down, breakout. It's there, that counts as a breakout test. I'll call it a high bar test. High bar test. High bar test. Right? So we have a breakout COB rally followed by full test 1, full test 2. So if this fails again to go higher, because they tested once, right? It tried to go up once, pulled back. Tried to go up twice, pulled back. So now we have to see if the bears are going to get aggressive and say, you know what, the bulls failed twice, let's break it. Or will the bulls say, the bears didn't go down once, they didn't go twice. If they don't go down a third time, let's try to take out the high. Right? But I'm favoring more on the bearish side because of the breakdown holding with full tests. The bulls are saying, oh, look at the red bricks, there's only 3, 3, 2. Where's the heavy selling? And it might be coming. So anyway, long story short, now let's take a look at what happened on the high bar. The high bar test right there. So you have to analyze what happened there. And I tell you folks, this happens over and over again. And definitely you can capitalize on it. Alright, so it goes to the high bar. Then the selling starts. So where's the indication? It's right here. Now, understand this. This selling is different than the prior selling. Here. Can you tell me why this selling is different than this selling? Well, just by looking at the chart, the first thing you want to note is that you were testing the resistance area up here, and then the selling came. So you tested the resistance area and then the selling came. It's not arbitrary in the middle of the range. It's not arbitrary at an arbitrary level. It's not arbitrary or quote unquote random, from a random point that you don't know if it's what it is. But it's at resistance and then the selling comes. Why is that important? Because when the market hits resistance, if the bulls were strong, the volume would be in the other direction going up, attempting to break out. But the bulls did not express their volume or pressure at resistance and backed off, giving the sellers the opportunity to sell heavy, and that's what they did. So if you're at resistance and your buyers aren't coming in and instead your sellers are coming in, guess what? They're going to try to take down the support because your buyers didn't come in. All right. So here's the selling print at resistance, and then it gave right here. It tested and gave the trade. Alright, so that's like, I don't know how many bricks is it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's not bad. Alright, and the other thing to note is further confirmed by market breadth. Meaning, yeah, it's at resistance, but you know, what about the other markets, other stocks? Are they selling off? Answer is yes, right there, 237 down with the biggest wave in 6 waves. And the volume has also increased. 1, 2, so volume increased here, heavy selling. This thing is such a pain. Here, market volume, this market volume. Here, yeah, and you just had to, like, not all the indications are ever clear. So for example, these 2 are clear, but this 15 isn't. So you have to, in your brain, in your mind, filter it. All right, you just, I don't know how to do it, but that's what you do, you know. So I know it's like you get information, bullish and bearish, and you have to judge which one you're going to accept and act on, because you will never have the case where it's 100% clear. Never. Otherwise, the market would be one-sided, right? So here it's telling you very clearly on the upper one right here, selling. Here, selling. Here, it shows buying, but here on the top one shows there's no buying. So I'm ignoring this, and I'm accepting this. Selling as having more weight than this move, this little bump up here. And then market goes down. Okay, so we're done with that. Let's go to the next one. Oh yeah, so this is another test. Why at resistance, selling pressure came in. 1, 2, 3. And this is the resistance, right? The blue line. And this is your selling. That's your selling. After that, the market rallies. But it's a little bit too much for my risk. So 1, 2, 3, 4, 5. So it tested, and then it went down. So at resistance, selling. So it's not, the pressure isn't going on the upside, it's going to the downside. So sell, boom, goes down. But getting in on it is a little too much risk. A little too much, so forget it. All right, next, okay. Next one. Next one hit the, so this market tapped the low bar and reversed right here. So again, this is a support over here. All right. So from support, buying. Support is the line, buying is the print. So what does that mean? That means tap. Yeah, unfortunately it didn't tap. If it had one more break, it would have tapped, but it didn't tap. So anyway, reverse, it tested on the higher time frame. Buying came in. It didn't pull back enough. It had one more brick to go, and it didn't go. So it just tested the breakout above here. This is the breakout. Tested once, retested, and went up. Boom, 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 boom. All right. So as you can see, oh yeah. So, and also, there's a couple of things I'm looking here, right? I'm looking for a break above these red and green or whatever, red, blue lines. So it's very clear chances for that being legitimate buying, breaking the trend to the upside is very likely. And then it goes. And that's all she wrote. So what are some of the lessons here? And also I would look at some indications below here, but it's in the morning and it's weird, so I can't really use this. This right here, 1340. I don't know. I don't know what time it is, but it just looks weird, right? So that's usually the first wave, and it causes all of that weirdness. But this one you can definitely see where the market came in with heavy price, heavy volume, telling you it's time to get in on the pullback. And rallies. All right. So what are some of the takeaways? Basically, you can complicate this stuff really a lot. But one of the easiest, not easiest, but one of the straightforward setup, I think you could call it setup, is just support and resistance. Support and resistance on the higher time framing, market those levels, waiting until they're tapped, and then having big price volume action. All right, that's telling you there's buying. So if you're at resistance, and listen to the logic here, if you're at resistance, and what do you expect if bulls are there? You expect a breakout of high price volume. But instead of a breakout at resistance, breaking resistance, you get selling, heavy price volume. Instead of going up, it goes down. That means that it's doing the opposite. Instead of it going up, high price volume going up, is going down. That's clear data telling you that there is selling at resistance and they're unable or not right now willing to break out. So if they're not going to break out, what are they going to do? At resistance, what's the only option left? It has to be a directional move down. I mean, that's the only thing they could do, right? Now, yes, it can change a bit. Let's say you have that heavy move down, and then the buyers come in and then break out. So that can happen. Or it might be a heavy move down, reaccumulation, and then, but it just favors, what I'm trying to explain here, it just favors the edge that the market will go down. When instead of buying at resistance, you have very heavy selling at resistance. Now your job is to be able, as an analyst and a trader, because every good trader, in my opinion, has excellent analytical skills. So you as a trader or analyst, you need to see that selling and quantify it, not based on some pattern, but based on quantifying it as selling pressure. And your only two variables there, actually three variables, is price, volume, and time. Based on those three variables, you need to quantify the price, volume, and based on price, volume, and time, quantify selling as heavy at resistance or buying as heavy at support. And I'm doing that very clearly. Look, 25, 30 is telling you. This is one way of doing it. Someone else may do it differently, but it'll always be a derivative of price, volume, and time, right? So they may do it based off of an indicator, right? Some type of calculation, and say, oh, look what happened to this momentum indicator or whatever, right? Or you could just do it this way. That's the way I do it. And look at this. This is support, right? This is support. This is a turning point. This is support. That was also support, but it failed. So market went down to that initial support, and then at that support, what did you get? You got buying. What did that buying do? It broke above that band high, so it broke trend. And heavy buying that breaks trend at support is telling you market favors the upside. And at resistance, what do you have? Heavy selling, breaking resistance, breaking support. What am I saying? At resistance, heavy selling, volume, breaking the level, whatever. And it comes back, tests, and goes down. And other correlations or whatever you're using also help confirm that. Okay, long story short, this is one style, and in my opinion, it's a very logical and good way of trading. Take care. Bye.